Good evening, everyone, and we want to welcome you all to another episode of the Black Market Podcast, presented by Hack the Markets. I am one of your co-hosts, AC, also known as the Market Oracle.
What is good, everybody? Raheem the Dream here. Let's get it.
Okay, Ken checking in, man. Hope everybody had a good start to the week. Good Monday.
Oh yeah, I know I had a good day.
Well,
Good if you know what you're doing.
I listen.
Hey, it's good that you've been listening in on these podcasts.
Oh yeah, for sure. You should have had a real good day today, because we've been
Oh, yeah.
talking about this for a second. We've been talking about this sell-off for a second.
Yep,
So hey, I'm just letting you know.
it's here.
You should have made some money today. If you was listening to us, you should have made some money today.
Absolutely.
For sure. Like, I've been doing a little research too on my own. I've been looking at the yields and all that stuff because basically we got the Fed meetings going on. I think tomorrow and Wednesday got the 2-day meeting coming up. And we saw that big drop today because, a lot of people just not knowing what the Feds are going to say and all this, that, and the other. But I feel like it's going to rebound. I saw some levels actually being hit. I think it's going to rebound. What you guys think?
I mean, it's got a long way to go. That's for sure. Today was a big sell-off. So I wonder how long it's going to take to recover from this thing. But definitely see some things at some key levels. So
Yeah, I agree. And just that end of the day power hour, pretty much the last 30 minutes confirmed for me that it's some people there that have been waiting on this to end. They're ready to go in there and buy it up.
That's what I was looking at too.
yeah.
I just saw how strong a lot of these buys, these plays were. So I got in on Best Buy off the bottom. That
Okay.
thing started ripping up towards the end of the day. And
Right.
I wasn't expecting that. I was just expecting, to sit there for a few days and then start making a move. But that thing ripped. And I love it when I get into a play and that thing start moving like that.
Yeah, it don't
Best
waste no
thing to see.
instant profit.
Man,
Right.
I'm telling you, instant.
Look, I know what you're talking about because I looked up and I had a good short set up. Remember on Friday when I called you about that Wells Fargo
Oh yeah.
activity.
Oh yeah.
Ain't
Man,
go no more.
hey, I'm still that's my joint, man. It is still Heen Fargo. Hey, because I'm taking them back and forth, man.
Yeah.
That's true.
I'm with them, man. Hey, I rolled them up.
Yeah.
And I jumped out the cliff with them.
Hey.
Hey, and guess what it did at the end of the day?
Started its way back up.
Yep. Hey, but I didn't get in on this time because
Yeah.
I was like, I guess I'll give him a break for a little while.
Can't ride them too hard.
Yeah.
Gotta give them a little rest.
Yeah.
Right.
Give them just a little rest.
Uh-huh.
They got what was that other play? Oh, that Illinois, the Illinois tool one.
Yeah.
Mm-hmm.
That one right there, man. That thing, it came down, but then it started ripping higher later at the end of the day. And with the strength of what it was looking like, how it was trading, I'm hoping that some of that stuff can transition over till tomorrow, and that'll be wonderful to see. Because I'm thinking a lot of people are gonna come in here and start trying to buy the dip. And
That's
we had
exactly-
talked about the channel this thing had been setting up in.
Everybody is like, oh man, this is hilarious because I'll tell you one thing. I ain't buying nothing right now till I see what happens tomorrow.
Exactly.
And get what you listening to this show, ain't no reason to try to catch a falling sword.
Nah. We don't like to call bottoms. The only time we like to call bottoms is when we can tell that it's something happening, like a double bottom or something. But just to be looking at the market and say, oh, yeah, this is going to be it. Nah, I don't like doing that one because like you just said, it's trying to catch a falling sword.
No risk management.
Yeah, that's terrible. Terrible call.
Hey, whenever it do gather itself, I'll be ready then. I'll be adding some more money to the get ready for it. I'll be
Oh, yeah.
down. That's what I
Yeah.
did.
Cause see, I had those shorts. I cashed in on a lot of those shorts already. Like today, I definitely cashed in on a lot of shorts. So, with that being said, I did start looking for some buys just because I seen the market move down so aggressive.
Right.
So, with this market that we're in right now, I still don't see it like tanking out. Cause we had called that range that it was in. So because of
Yeah.
that range, I'm thinking that that's really gonna keep us like up. I think it's gonna prop it up a little bit. I don't think it's just gonna fall out.
I got faith in these retailer traders out here
I do too.
because I mean, just from what happened at the end of the day, that's the reason I closed out my puts was
Yeah.
because of the end of the day activity.
Yeah, that thing start moving aggressive. But the
Yeah.
end of the day activity usually is institutional activity.
Mm.
So that could have just been a lot of institutions coming in and buying this thing.
That's even better. Double whammy.
Mm-hmm.
And we know what the retailer's talking about. That's
Yeah.
all on the internet.
Yeah. Cause for sure, like the way that they like to break it down is like retail kind of like has the beginning. They hold like the beginning of the market like between 9:30 all the way up to like I guess 11 or 10:30 around that area. That's what they
Mm-hmm.
say the retailers dominate. And then you got the end of the day, which is what they say
That
the
when the
uh the
institution,
industry, like the big heavyweights, that's who the ones they come in, the institutions, they come in and dominate that end. That's why you see a lot of people. That's why they call it the power hour because those guys come in and start moving some things. Cause to them, man, VWAP and all this other stuff is important. You know, trying to
yeah,
actually buy up underneath it and all that stuff.
I like when the institutional and the retailer be on the same page
Oh
instead
yeah,
of wonder what this crazy stuff they've been doing for the whole pandemic.
telling you,
They've been fighting each other the whole pandemic.
I'm telling you, it ain't been looking good, man. Them boys been out here going crazy. Now I'm looking at Spy, cause see, like I did want to talk about ETFs today because ETFs are good to talk about, and people need to know about ETFs. We just need to give them a little background on some ETFs and talk about some of that stuff. Because I mean, like for sure, it's a good thing to know about. And of course,
Mm-hmm.
they're exchange traded funds. So that's what the ETF stands for, pretty much. That's all it is. And I'm looking at SPY right now. So what SPY is the ETF that's coming from Spider. So it's one of the Spider indexes, and it tracks the S&P 500. So that's pretty much what we're looking at, guys. Is SPY? That's what it does. It tracks the S&P 500. It's 505 companies in the S&P 500, and that's what this thing tracks. So right now, we're seeing it trade about $434.04 if you wanted to buy in. Not too bad. And I'm looking at the pullback that we just saw today. Now, it was
Mm-hmm.
an aggressive pullback, but it was an aggressive move to the upside too. Like I'm seeing a real big like hammer. You know?
Right. I want to say, real quick. What I'm curious on is what people's financial advisors are telling them right now.
Yeah.
I'm really curious
Yeah.
because you know that whenever it was going up, I know that they were saying, just wait a little bit. They were telling them to just hold on to it for a little while.
Hmm.
But I don't know. You think they tell them to hold on after the day, or do
To
you
be
think they'll
honest,
say
I mean like
time to
it
grab?
depends. I think it depends. It depends on what type of client you are. If you high
Mhm.
liquid, they gonna tell you to hold on and probably come in. If you got a high account value, yeah, they gonna tell you to buy more probably.
Right,
If you don't have that much, they probably gonna tell you need to start thinking about getting out. Just
right,
because I mean it makes sense. Because if you don't have that much and the things start tanking out on you, you're gonna lose a lot more than what somebody with a lot of money got going on.
right,
And especially with them, they probably gonna employ some of the best people. They're not gonna be out here just trying to get anybody off the side of the street to manage their money. So they're gonna probably be with a Goldman Sachs or something like that. So they're gonna have their stuff managed appropriately.
right. Hmm.
But of
That
course,
makes sense. But like you were saying, the ETF. Another thing about it is that, like he said, it's 500 companies. So that's a pretty good representation of the
hmm
market. Gives you an idea.
yeah, I think like the S&P 500 pretty much makes up like 80% of the market.
Mm.
So the whole valuation of the U.S. market, about 80% of it is inside of the S&P 500. So that's a good reason why you can track the S&P 500 and get a good gauge of what the whole market is doing. So that's the reason why we like those indexes. So they made these ETFs so that you can actually trade the index, because before you couldn't, the SPX, the index, you can't trade SPX. There's no contracts on SPX. You can't buy it. It's not a stock. It's just an index. It just tells you, you know, if the whole market is going up or if the whole market is going down. That's pretty much all it's doing, is giving you kind of like a good gauge or a good indication of what the market is doing. That's all it was doing. So now you got these ETFs. They're better than mutual funds too. If you're still messing with mutual funds, I pray for you, because I don't know why you still messing with mutual funds, especially when ETFs are out now. But you know, beyond that, we just gonna keep it, keep it simple with the ETF. So of course we got a whole bunch of things we can track. And these ETFs track a whole bunch of different things. So they track, of course, the NASDAQ, you know. That's the NASDAQ 100. So that's mainly, how we talk about the NASDAQ 100. That's pretty much all the tech stocks, you know.
Uh-huh.
So,
And they actually have these ETFs optional.
mm-hmm.
So you
Yep.
buy calls and puts on these things
Yep.
now,
Exactly.
which is
So you
like,
could do that too.
yeah,
You can
that's
get
just
in like
weird.
what he said, like Raheem
Even
just said, you
if
can get
you
in on that.
starting or something, and
Mm-hmm.
you just want to practice, going with something that's just a pretty basic trend.
Mm-hmm.
This is big. ETFs would be these specific ETFs. The index would be one that'd be good to start with.
Yeah. And see, like, so I have a strategy that
Mhm,
when it gets like to earning season, like how we're getting up to October now, and then we're gonna hit like the big earning season again.
mhm.
I like to switch over to using the indexes, so the SPY and all these other ETFs that track all these indexes, because you got QQQ that does the Nasdaq. That's one the
Mm-hmm.
Nasdaq 100. Like we just said, that's the tech people, the tech innovators. So you got your big tech in there, and big time people that trade on the Nasdaq index. That's why you get your Nasdaq 100. Then you got your Dow. That's the big boys. That's the heavyweights, the top 30 companies in the U.S.
Hey,
Yeah,
that's 30, buddy.
That's the top 30. You in the
good
Dow,
blue
man, you
chips.
doing something.
Hey, they most stable. They're a little more. That's why they're a little more stable.
Mm-hmm. They the biggest companies in the U.S. So I mean, like these things. But I mean, you also got to think about it. You got people like Google and Apple and Tesla. Well, I don't think Tesla's in there, but you got Google and Apple in there, and I think you got Facebook in there too, and Amazon, and those things
Got a
swing.
few tech.
Yeah,
Got a few big techs in there.
yeah,
Yeah. So those things swing. So
Yeah, those techs, man. Especially, but like you said, the earning seasons. It's all around the same time.
yeah. And you got to also think about this. Like, so we talked about them from greatest to least. So, the 500 to the 100 to the 30. So, the less amount of stocks, you got to think about it like this, guys, is the less amount of stocks you have, the more the index is going to swing. The more volatile the index is going to swing, because you don't have as many players. Like, if you got 500 players, if one falls out, but 499 of them are still up, I mean, the
Mm,
index is
right.
going to be
yeah.
extremely high.
Mm-hmm.
You really have to have like a large amount of players go down for this thing. But if you only got 30 companies and then you got one that goes down, that can really hurt. You got
Right.
three companies that go down out of 30. That's huge.
Right.
Whereas
Yeah,
3 out of 500, that's negligible.
nothing. Yeah,
Mhm.
So that's why you
Right.
can see like the S&P isn't gonna move as drastic as the Dow. You'll see the Dow, but the Dow is like extremely high too. The thing is like way up there. Like I haven't looked at it in a second. Let me see if I can find out what the Dow is right now. So this thing is, so I'm looking at, okay, this is the Spider ETF. Let me not look at the ETF. Let me actually look at the Dow. This thing is at 33,000, 34,000 basically. It's at
Sheesh.
34,970. That's what the Dow Jones is. So that's the top 30. But at the same time, you got 30 companies, which is, small basket. Then on
Right.
top of that, it's 33,000. So this thing is swinging up and down like ridiculous. Because, I mean, a 5% move in a $33,000 index is nothing. You know?
Right.
That's
Right.
1,500 like points
Yeah.
like that.
Yeah, it is. But I think the Nasdaq, one of them, I think it was Nasdaq. Maybe it was the Dow. Wow, it was the Nasdaq for sure. Like 900 points down today. Ended up at like 600
Okay.
on the end of the pull up.
But yeah. So that's a good reason why you guys might want to get in on some of these ETFs. ETFs are just real easy to use, good vehicles. And that's
Mm-hmm.
if you don't want to go in, you don't want to just find yourself a stock, and how we do stock picking. Here at Hack the Markets, we do a lot of stock picking. We got a lot of proprietary tools that are running, and we're able to find some things, see some things that a lot of other people won't see. We use our own proprietary analysis. We got our own way of looking at the market. And so, yeah, we can gauge certain things about what we believe is going to happen. And we can just, place our trades accordingly. But
Right.
if you're not wanting to do that, you do want to participate in the stock market and you just want to make some money. I mean, that ETF is a very, very good way to go.
Mm-hmm. Real simple.
Yeah. Cause like we just said, you got the QQQ. That right there does the Dow. I mean, I'm sorry, not the Dow, the Nasdaq. And then you have DAI. So if you wanted to get in on something that tracked the DIA. If you wanted to get in on something that tracked the Dow Jones, DIA is an ETF. It's a spider ETF, and it also tracks the Dow. So those are good things that you can get in on.
Yeah, that's what it was. That's what it was. The Dow was down nine,
Yeah.
Mm-hmm.
down
Yeah, I was
nine. And
figuring that. I was about to look at it once you said that. But yeah, I think it was, yeah, you're right. It was
that
the Dow.
you said it makes sense because it's the one that costs the most. So
Yeah.
you expect.
Yeah. Yeah, you'll see runs like that very, very often. Like it's not like a random event or something seldom that you'll see something like that. But like I said, because of that sell off that we saw today and how aggressive it was, like I think we actually did get back to one of those buy zones, and I think that's the reason why we saw it bounce so aggressively. Now, I don't think it's just gonna go straight back up tomorrow or anything like that. It might have a little continuation, but I'm really looking forward to kind of like settle out, and it may even try to dip back down to that low that it did. Try to make a double bottom
Yeah.
and then go higher. I
Mm-hmm.
never have too many high expectations,
I tell you
but
one thing.
when my expectations are exceeded, I am extremely happy.
Hey, I tell you one thing. We know it's gonna move on Wednesday on that meeting. We know that.
Oh
For
yeah.
sure.
That's one thing we do know. If it don't do nothing, anything else, whenever it do it, it's gonna do something then.
That is one thing that we can count on. One thing that we could definitely count on.
Yes, sir.
But like again, if you don't want to track the whole market, you could track sectors. So they got ETFs that's broken down over sectors. So say
Right.
for instance you like materials because you're big on like raw materials and things of that nature and you kind of like know that business. I mean you got ETFs that track that sector. Healthcare. Um information technology, all that stuff, real estate. You got all these types of ETFs that track the sectors. And then, of course, your sectors are broken down into industries. So if you wanted to get into an industry, you can do it that way. So if you wanted to get into the airlines only, you got that. It's a whole
Mm-hmm.
bunch of different ways that you can actually go out here and trade the whole markets and not have to just stock pick. And, it's a little bit easier because you get a basket of stock. But
help you
That's
get a
an easy way
perspective
to
for how the
get into
market
it.
really moves.
Mm-hmm.
Yeah.
It's a good beginning. It's a great
Yeah.
beginning.
Yeah, exactly. And then you hear about all these sector rotations and all that stuff. Um, a lot of these guys, like a lot of these big firms, not big firms, but pension firms, pension funds and things of that nature, they like to buy a lot of these things. They buy a lot of ETFs as well. So it's not like you out here investing alone. You'll have a lot of people in here with you. Very
Real.
Yeah,
liquid too.
exactly.
Depending on which one you get, is very liquid.
Yeah. I like them. Hey, I know I like them. Hey, and I still trade, you know what I'm saying? I trade advanced trader, and I still like to trade this beginner.
Yeah.
I was in QQQ. I've been in for a little minute. So
It gets
Yeah.
the job done.
I mean, because the thing is, if you can see it, like I'm looking at the DIA right now. That's that Dow ETF that I was talking about. And I'm looking at it right now, and it would be no reason for me not to buy. Like if I was looking at it earlier, it wouldn't have been any reason for me not to buy like some options or maybe even a couple shares of this thing. Because why not? You know?
Right.
This
I
thing
even
is
saw
actually
people
moving pretty
when
nicely. It came down to that buy area. We could have made some decent money off this.
when the percentages for like savings and all were going down in the beginning of COVID, that might have been a good time too.
For sure.
Better percentage return
For
from those
sure, for sure.
ETFs than
But
I got
they
a
even got
question.
ETLs for the currencies. They got ETLs for the
yeah.
bonds and the yields and all that stuff. Because I'm looking at the yields right now too. Because for that what is it for the meeting that they got? The Fed meeting. So once they start saying that they're tapering, once they announce that,
That's it. There it goes.
there it is, yields going up. Because they're about to start selling the mess out of those bonds because they're
Right.
not buying anymore. So those prices are gonna go down and those yields are gonna go up.
What we've been waiting on all September right now.
Yeah.
They
And
really held out.
if that happens, bye bye QQ. Cause that has a lot of QQQ, because that has a lot of growth.
Yeah, that's gonna be.
Yeah. Growth gets killed once interest rates go high.
Yeah. Hey,
So you definitely gonna want to switch to the value.
Yeah.
let me ask you. I got a question for y'all. Let me ask y'all this: Do you all think this sell-off was influenced by anything?
What do you think it was influenced by? What do I think it was influenced by, rather?
What all do you think it was influenced by?
Man,
Because
there's a
it's
lot of stuff out here, man. Cause you got the Chinese selling off.
Yeah, that's what I was gonna say.
You got
That's
COVID concerns. You got the meeting coming up for the Fed. Man, it's so much
yeah.
stuff. Like it's so many
Media.
reasons. Like they all probably
Yeah.
just snowballing on top of each other.
Well, people also have heard about the volatility from September as a baseline.
right.
So that's
That's
already going to start
Yeah.
getting some attention.
yeah.
Yeah, I saw like even retail is down, so like it's really not a big point for these
That's
big
why I
whales to
bought
go in
that
there and
retail,
save.
baby, because I'm buying it
Yeah,
going into this
yeah,
Christmas spending spree, boy.
that's it.
This the Christmas spending spree, baby.
Man, like a saver, boy. That Christmas time tick.
I'm telling you. Hey,
You
that's
know?
why I opened up that position in Best Buy. Cause I just know
That.
that
Yep.
everybody finna go out here trying to buy this iPhone 13. People finna
Oh,
go out
yeah.
here trying to buy these new computers with this Windows 11. People finna go out here and buy these new gaming systems when they finally come out back into the stores because they probably gonna ramp up for the holidays.
Probably gonna like really drop a bat for the holidays, huh?
Oh, supply chain is
Like
already down.
the only thing I'm looking at though,
Give me one now.
hey, the only thing that's the drawback for me this year, we ain't got no stimulus checks, man. We ain't got no
Yeah, I was thinking
stimulus
about
checks to
that.
back it up, man. We need the
That would have been
stimulus checks.
too easy.
Hey, that would have been like
We can't have it all.
perfect storm.
Black Friday, holidays. Come on, huh?
Still though, if you had that stimulus check on top of that, that would have just sweetened the pot.
Yeah, it would have.
It would have sweetened the spot. It would have sweetened that pot so nicely.
It would have been 3 people tweet that they were successful traders, and then there goes everybody's Christmas money back into the market right there.
Jeez.
But man, I'm telling you, like, it's some good setups out here. It's
Oh
some
yeah,
really, very, very good setups out here.
Yeah.
key levels, baby.
Yeah.
So
And I'm
better
looking
key
at
in.
these yields. Like, I'm looking at the yields right now. They're moving higher. So I would definitely be on the lookout for growth stocks to start kind of like slowing down momentum. I'm not gonna say they're gonna tank out, but momentum isn't gonna be as strong.
Right.
Still cheap money though. So it's not like it's out, that you're out here spending 5%, 6%, 7% to get financing for different things. Like it's still reasonable right now. Still reasonable. Still something to look at though. I was paying attention to that yield curve. Like so I was comparing that US 10-year to the US 2-year. And I can see that yield curve actually has grown very nicely. It pulled back a little bit just because these rates pulled back a little bit
Right.
this year, but that yield curve is actually going pretty nicely with that 10-year against that 2-year. So they're getting a nice little gap in between them. So that right there tells you that the economy is actually doing pretty well. Because once that yield curve starts tightening, that's when a lot of people start getting worried about a recession. A lot of people could start getting worried about a lot of things where the economy should slow down. So once it starts widening, that's a good thing for growth. Very good signs. Very good
The
signs.
VIX at the top too. The
Mm.
VIX fear index.
Mm-hmm.
Oh yeah.
I checked that earlier today. I know it was at 28. Did it pull back any? Because I didn't check it at the end of the day.
That would be a nice key thing.
Yeah, I know I checked it earlier, and that thing was about 28. Okay, it came down about 25. 25.72. Cause yeah, when I checked it, it was at 28. And I was saying that I should short it. Like I was saying, man, I should have got in on that thing and I should have shorted it. I was like, man, the VIX ain't finna break out. I saw it get to that 28 level and I was like, yeah, I should short this thing. I didn't. But man, that would have been a good play.
Yeah, there's a chance to do it too.
That would have been a good play.
Sheesh. That joker jumped up there. That joker looked like that gap that was back there when it first, what it was, 2020.
And see,
It looked like that.
and see, this is the thing. So because of that fear index going down, I'm thinking that, we're gonna start seeing some money pumped in now because the fear index ain't going higher.
That's what I was about to that was my next question I was gonna ask
Yeah.
you. Do you think you think the government's gonna do a bailout again?
I don't think it's gonna be another bailout.
Yeah, I don't think to that same extent. There wouldn't be the same incentive.
Yeah, I don't see a bailout. Cause I mean, if you doing bad now, you just doing bad business. Because they gave you enough money last year to suffice.
Yeah.
And then they probably gave you all types of tax credits and all types of stuff. So I mean, if you just underwater like that, then you either in a business that's just very, very hit, that probably is still getting economic like resources from the government, or you just a terrible manager, my dog. You just need to shut them doors anyway.
Hey, that unemployment rate, what they gonna do about that? They about to start just increase. They gonna have to start paying these companies to pay the people.
The companies have to decide if it's worth it or not for them to.
That's why that's going on with this inflation, like this housing. Man, the pricing, they try to offer me some more money today.
Oh man,
what they did last time, y'all.
They trying to buy your house, man.
They trying to get me out of here. Hey, what? I'm holding.
Hold on strong, man.
I'm holding. Holding.
That's it.
You got to, man.
Look, boy, because I'm telling you, at the rate that these people are trying to buy these houses right now, you can't tell me that it's not expected to be even more than what they buying for, because it's already too expensive right now. You buying in the expensive market, you know something.
Yeah. Now you remember.
Right.
Now look at this too, though. And then I also heard about this market manipulation trick that, I had thought about the same thing, but people are actually out here doing this, like the large people like Zillow and all these other guys that have this information. So
Right.
what's happening is, number one, let's look at the numbers. So the numbers, I think new homes, so particularly new homes, not just any home for sale, but particularly new homes for sale, they went down, and they started, like, the number of buyers that started decreasing back in July. So we're into our second month now where we've seen, that pullback in buying activity for just particularly new construction homes.
Mm-hmm.
So that right there is kind of like putting a weight on the market now, because that right there is some supply that's just sitting there that people aren't really, interacting with too much. So then you look at the fact that, of course, you can do all the moratorium and all that stuff. It's been gone. So now you can actually put people out and all this. They haven't necessarily done it just yet, but and I'm thinking soon and very soon they gonna start, kicking these doors down, telling them get out.
Yeah,
So
and big industries.
Right.
yeah. So I'm looking at that, and I'm also looking at a lot of these. So I'm tracking a lot of stuff. I use Zillow and all that. I got like a couple things that I kind of like just set up for like searches. And I just use them to track the market, not necessarily, just to see, to gauge it and get like reports on certain things. And what
Right.
I'm seeing is a lot of the stuff that I just kind of like look at and I might save, or I might save the whole search or something like that. A lot of the stuff is going down. Like, I've seen homes going down for like 20,000, 10,000, 15,000, 9,000. Like, they're dropping now because people aren't buying them homes as much now. They're still buying, but they're not buying as much now.
Yeah.
And once they actually start kicking those doors down and telling people get out, that's going to bring so much more supply to the market that these new homes are already suffering from, that it's going to be ridiculous. Like, those prices are going to probably come down at least another 5 to
And that
10%,
Yeah. Yeah.
yeah, if it's too much.
maybe even 15%.
Hey, guess what? In Atlanta, they not let them
They
be.
won't let them move the price
Never
down.
gonna be no supply in Atlanta. They buying them out.
Hey, you right.
Man,
So this is
man,
the tactic that I was about to tell you about, that these big guys are doing. So what they're doing is they're going in and they're buying homes. So Zillow, we'll just say Zillow. We'll say company ABC. We're not gonna say Zillow because we're not gonna particularly say that Zillow is doing this. We're gonna say company ABC is doing this. So
Mhm.
company ABC comes out and they see some homes in the area, and what they do is they go and buy a couple homes. So if it's 5 homes over there, they might buy 3, and then the other 2 they'll pay a little extra for. So
man,
that way
this
you
sounds
can easily manipulate the market.
Yeah.
So
I was
you
reading
bought
something.
these at a certain price, and now you've added these extras, but they're same area, but you paid a little bit more for them. So now you can use these as
Yeah.
comps for the other 3 that you just bought. So now you can artificially inflate the 3 based off these 2. And then
yeah,
hopefully you can inflate a little bit off the 2 that you paid a little bit more for, make a little bit off that, but you'll make more off the 3 that you bought at a lower price. So you still
And
get
then
profit on all 5, but you get bigger profit off of 3.
bring
and you market that price of those two.
Yeah, you market the price of the 2 for comps.
That's it.
And
Take
so
up
that
like
way now
double
you can
payment.
demand a higher price.
Yeah, I was reading something. I thought it was conspiracy theory. I said, what? I've never
And I
thought
mean,
of.
like, that's easy ways to do it. Because, I mean, think of another way.
Yeah.
It is.
They got their own appraisers and stuff like that. So, I mean, like, boom, 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 there you go. You see?
It's internal.
You put 2 and 2 together, boom. That's how you can start manipulate markets. And so that's why I also said that the same way as the stock market is heavily manipulated, these houses can be manipulated because they're just out here doing whatever they want to do. Because say for instance they go out here, they buy those homes and then the prices drop. Guess what they're gonna do? They're still gonna sell them, get a little bit of money, and then the money that they lost, they're gonna write off as a tax write off, and they still basically get the money. You see what I'm saying? They didn't make anything, but at the same time they cut some of their taxes, so now they offset some things, so now they can make some more somewhere else. So some people have to make, a lot of them do make bad trades every now and then. Like big guys will make a trade, and I'm not gonna say they purposely make a bad trade, but they'll hold on to that bad trade so that they can have something to write off. You know,
That too,
tax loss harvesting.
Man, hey, these houses raised up now. I say, we already know inflation coming, but the only thing that's battling that can battle the real estate market is, like you said, the high supply. But other than that, it's in an area where, like Atlanta, where these people was already moving to before the pandemic, the supply tight.
Oh yeah, for sure. There's a lot of people in Atlanta that don't need to be, that I'm not gonna say that don't need to be, but they aren't supposed to be in the home that they're in. Just because
they ain't from there.
But they couldn't do anything about that. But now they can. So now I'm interested to see what they're about to do. Who really getting them the moving trucks and them shares pulling up.
That's exactly.
Hey, see, that's what. Yep, exactly. Yep.
Who's coming to knock on doors?
Look, that's gonna be the time.
I'm telling you,
that's gonna be the time right there.
Man, you gonna be thinking folks doing drug busts, man. They gonna be out here putting out so many folks. They're gonna have 20 police cars in the area. You gonna be like, man, what's going on? They're gonna be at everybody's house. Hey, get out.
Hey, yeah, that's their step. They already gave us the free money, made them dependent. Now they gonna kick them out there.
Now they gotta go take it.
And now they do everything. Now they got control of them. Now you gotta do what they need you to do just to live.
I'm telling you.
They done bamboozled you out there. I hope you ain't get bamboozled out there. I really hope not.
Oh man.
That's
funny though. That's how it's going though out here, man. That is how it's going out here.
I wonder how that's going to be received. Somebody's going to have a think piece on bullying people out of homes and all that kind of thing.
That's going to be messed up, bro.
Yeah. I mean, the thing is, like, is it really bullying somebody out there home? Put yourself in the shoes of the lender. You just lended Raheem $250,000, and he said he was going to give it back to you. And then the government says he doesn't have to pay you for a year. And you still sitting here like, dude, the only reason why I gave you this was because I was going to get a set amount back and I was going to make money off interest. Like the interest was whatever, 3%, 4%, whatever you guys agreed to. So that's how you're making your money. So now you're out $250,000, no income coming in whatsoever.
Right. When this was supposed to be
and you sitting here like, man, I'm just out. And think about it, he's not the only one that you gave money out to.
Mm-hmm. Yeah. From that person, you always have to remind people of that side of it.
Man, so it's like, man, I am hurting. Like, dude, would you give me money? Would you give me money and then be like, okay, don't worry about it. Right. Like, I ain't gotta get it back.
Yeah, you're fine.
Come on now, dude. Especially if you gonna argue me up and down. Hey man, you really gonna pay me back? You gonna pay, man? I can't, man. You really gonna pay? I'm telling you, man, these folks, man, they be on one. Cause they be thinking about, I don't know what they be thinking about, man. I really don't know what they be thinking about.
Well, once they heard they didn't have to pay it back for a year, that payment was put on the back burner.
Man, when I tell you, and then they gonna come back playing the victim. Like, they made them not pay their rent.
Yeah.
And like
They
they
forced us
made them
out.
not do that. It's like that was your choice. You made a
Mhm.
bad choice because you didn't save the rest of your money. Like you could have did so much other stuff.
Right.
They could have got a head start.
It's crazy.
Work out a payment plan, something.
It's crazy. So now a lot of people probably gonna be in bigger debt than they were before because
yeah.
you know how people get. They don't have to pay certain thing, and then they haven't paid it in so long they forget that they had to pay that. So now they go
That's
and
it.
get other bills because it's like I don't save so much not paying my mortgage. I ain't got to pay that 1,000 or 2,000 or whatever you paying out a month.
That's not
So
like bad money management.
yeah.
Exactly.
So now, or some people higher than that. So now it's like, man, shoot, I ain't got to pay none of this back. I'm just finna, use this extra money to do this. Now you done did all this extra stuff. Don't even know what you done signed up for. Now you got to get hit with this thing again. And there's no telling what the price of this thing is going to be because you got to understand that it's either they're going to put it on the back end or they're going to just charge you right now
Front
and
load
be
it,
like,
yeah.
look, we're not finna put no extra terms on this. You finna pay this amount, which is adjusted for you not paying for a year.
Right.
Ooh, no joke, not gonna have no lump sum ready.
I'm telling you. So I don't think they're gonna want that lump sum, but they're gonna definitely add that years of payment.
Oh,
They're gonna
yeah.
add that to what you supposed to pay. So if you had $1,000 payment, that thing might be 1,200 now. You know what I'm saying? So now you got to look at that.
Hey, that's the short end of the stick right there.
Man.
I'm telling you. I'm telling you.
Been finessing and moving these finances, but hey, what we gonna do about the U.S. debt? When we gonna reach that ceiling? When that ceiling gonna break? We're
Never.
gonna
No, I was gonna say there is no
Never. Because
ceiling
they
for
can keep
that.
printing money. And they just gonna keep selling bonds. And people gonna keep buying them.
Mm-hmm.
And the government just keep going to more and more debt because bonds ain't nothing but money being borrowed. When you buy a bond, you're basically giving the government money. They're asking you for some money, and in return, they'll give you an interest rate, a payment with an interest attached to it. That's all it is a loan that you're giving the government. A bond is basically a loan. Even with corporate bonds, you're basically loaning the money to that corporation.
Yeah.
That's all a bond is. They just wrap it up in a fancy term and call it a bond.
Yeah, there's a lot of things that are going to happen before that debt number starts to even remotely come down. Even thought of.
Yeah, that junk ain't coming nowhere, man.
Ever.
You know how much money we got to make to make that debt ceiling go down? That's crazy.
Oh, well, that's the world we live in.
You right. Hey, y'all got any picks though? Y'all boys got any picks y'all want to share with the people? It's about that time.
Y'all know what's going on right now, man. My pick is see what happened on the open.
I understand, man. I understand. Sometimes, man, it ain't even worth putting out anything.
I got a real pick. One.
That's because this market's not going to be the same.
I'm thinking gonna be able to survive. I'm thinking these these motor companies, Ford and GM. I feel like they're gonna get the extra money for infrastructure bill anyway.
Mm-hmm.
So help them be able to really weather the storm. Even though the storm gonna get weathered by everybody just buying the dip, but these guys even have the government backing them on top of everybody buying the dip that they get.
I'm gonna go out on the limb and say Best Buy, man. I'm going out. Hey, I'm risky. Best Buy.
Okay.
That's what I'm buying. Well, I already bought it. I'm so risky.
That ain't playing.
They don't call me the Oracle for nothing, baby. I'm out here buying it.
Gotta get in there. Gotta get in
That's
there.
it.
I'm telling you, man. I'm buying when it look like they ain't even supposed to be buying this stuff.
Oh my goodness.
I'm buying it up, baby. Give it to
Buffett
me.
said the best time to buy.
I'm like one of them hungry hippos.
Man, put that back in the world, buddy. That joke was just. Hey, folks, you remember that gap feeling gave? Well, it feeling it
Earlier.
time, bro. It's feeling it all the way up.
That's what I was seeing. Some red photo news on these GBPs, these cab pairs too, and USD for Friday. So
yeah, that's gonna be something. That's gonna be something right now.
That's some nice information though. I guess what we can go ahead and do is let our people know if you guys want to get any type of trade recommendations, you want to learn how to trade, you want to get access to anything that we're talking about on the back end, you want to see how we trade, how we make that money, head over to hackthemarketstrading.com. You can get you a free subscription or you can sign up for the premium joint. The premium will, of course, give you all access to us. Free will give you a little bit of access, very limited though. You're not gonna get as much. Definitely follow us on Instagram, follow us on Twitter, like us on Facebook, and for sure subscribe to the YouTube channel. Cause this is where you get to enjoy the Black Market Podcast and all the other videos that we put out.
Right.
That's it.
For sure, for sure. Anything else I want to add before we get out of here?
Y'all stay safe in these markets, man.
Hey, they said
Proper
Chicken Little out here,
management.
man. They said the sky falling.
Use proper risk management.
Right, risk management.
Hey, you better have some good risk management. I'm out here being risky, but don't think that I'm not out here playing with good risk management. I'm not out here finna lose all my money. So that's definitely a key to trading. You gotta have good risk management. Don't have that,
Yes,
man.
sir.
You gonna blow your bag real fast.